Hey guys, it's Ewan here from the2traders.com. I'm just going to be going through the latest video updates. So I'm going to cover some positions we saw last week, some big movers, and also where I think the market's going from here. So this is one of my accounts at the moment. I'm actually in the process of moving broker, some of you will know, so don't look into too much of where I'm trading at the moment. But you can see we've got a lot of big profits open, so a lot of big dollar moves, a few yen moves, and you can see the profit, the bottom of the profit here is 8,500. So I actually made $11,000 in 48 hours last week, which is insane. It's the best 48 hours I've ever had, which is more than I would have made in 3 months of work when I was working a full-time job. And I made it in 48 hours, sat from a beach in Bali. So pretty incredible week last week, and we're going to talk through some of the moves now. I sent all these trades out to the alerts team, alerts group. So if you're not already, you can sign up now. If you go to the website and go to chat room and alerts, and at the top of there you'll see a little banner that says subscribe now to get real-time alerts. If you just click there, it'll take you to the subscription page, and then you'll get a daily alert with my market update and any new trades I place. So every single one of these trades I sent out, so a lot of people are doing really well. Congratulations to everyone else who made money last week. I know a lot of you have hit all-time account highs, so well done guys, keep it up. So this is the big move last week, and I'm going to go through some of the charts now. This big mover was the dollar, so we've got a lot of short dollar positions on, which is why we did so well. We had this little bit of a crazy day on Thursday. You can see if I just zoom in a little bit, we've got this big spike. So Trump said he wanted a strong dollar, and everyone kind of used that as an opportunity to get kind of close out some of their sell positions and buy back. We had this big spike down from this low here up, and now we've started coming back down. So my view is still very bearish on the dollar in the long term. What we might see next week is a bit of a consolidation or a bit more of a pullback. So if the dollar might pull back a little bit, it does seem a little bit oversold at the moment. But if you look on a longer scale, it's always useful to give some perspective as to how big these moves really are. And if we look back all the way back to kind of 2015 region, we'll see that on the scale of things, the dollar is actually pretty expensive at the moment. When this loads up, so you can see we've broken down below this pretty significant support level. We had a test back in 2015, and then twice in 2016, twice in 2017, and we've only recently broke this, so I expect a pretty big downside move. And you can see, look where the dollar was in 2013-14. This is where we're probably going to end up back in the next few months to year, in my view anyway. So this move doesn't look too overextended on the scale of things, but we might see some kind of short-term pullback consolidation, and I will be looking to close out some of my positions in the next few days, namely GBP USD and EURUSD that got in a lot earlier. So if I just flick over, I've got the GBP USD chart here. I entered this break to the 18-month highs, and we've been running pretty much kind of 400 pips since then, and this position is at around, I think, 3,000 in profit, so 800 on this one, and then another position here, 2,200. So that's about $4,000, and I've got another account with another $1,000 on there, so about $5,000 in profit just from that move. So really, really good move here. But again, you can see it did pull back a little bit, and that might be an opportunity for some people to start selling their positions, and we might see a bit of a correction again before we move up. But again, still very bullish on this market, bearish on the dollar. And if we look back, again, just give a longer term perspective on this, it looks very expensive now. But comparing this to where it was in 2016, 2015, or even earlier, this is actually still pretty low. Just wait for this to load up. So you can see we're actually back to Brexit levels. The week before Brexit, we were kind of at the same price we are now. So you can see this kind of priced in kind of what we think is going to happen with Brexit. Now this is kind of an overreaction, and people are kind of realizing it wasn't as big of a deal as we might have originally thought. And maybe we will go back to some levels that we saw in 2013, 2014, 2015, and that would be really, really good for our position. So we'll keep buying GBP USD until we see kind of a more permanent change in trend. But for now, I'll hold it for a few more days, and I'll be looking to take the profit on this. And this will probably be my biggest mover in the last couple of weeks. So really good move here. Just going to move to away from the dollar for a second. This is a trade I've flagged up a few times now, just because I think it has so much upside potential. This is corn. A lot of you I know don't have access to a broker that lets you trade corn. If you don't, then you can go to the website, go to the preferred broker section at the top, and XTB is the broker I'm going to be using soon, and they have all these markets: corn, cotton, cocoa, Other markets that begin with C, and palladium, platinum, all these markets that you can't trade in a lot of brokers, but they do have access to, and you can make a lot of money on these. And I'm going to show you why in a second. Sorry, this is being pretty slow at loading at the moment. The internet here is not amazing, but you can work from anywhere as long as you've got access to the market. So here you go. So if you just go to XTB, and you'll see that I can trade a lot of these markets on here now. So you can sign up through the website, and then you'll be able to trade things like corn and wheat and cotton, and all these ones I'm about to show you now. So just flicking back, this is the corn market from September to kind of January. So this is 4-month consolidation, and you'll see just how tight this market is. So we've been going from 3.35 to 3.45 or 3.47, which is a 12 cents range. And given the historical volatility of this market, that's really, really, really tight. So you can see every time the market comes up to 4.7, everyone's been selling off. It goes pretty much straight down to 3.35 and then sells off. And it's been bouncing around this range for 5 months now, until Wednesday last week when we saw this breakout, which was a really, really good signal for me to buy. We had to break out the Bollinger Bands. The trend's been turning up, break out the consolidation, and we've also hit kind of 5-month highs here. So we saw a little bit of a pullback on Thursday, so that's this little red day here. And then we're back to a bullish momentum. So what I really want to see here is a big follow through, maybe to the 3.6, 3.7 region. And actually, if you look back at the volatility of this historically, you're going to see how quickly this can run up. So this can run from $3, $4 up to $6 in a matter of a few months. And those moves are absolutely huge when it comes to catching kind of momentum and making money along the way, because a move of just 10 cents can be is more than 1-to-1 risk reward. So a move of 10 cents is almost a 2-to-1, which for me would be around $4,000. And if you think a move to $4 is 50 cents, that could, for me, is going to probably be a $20,000, $25,000 move. And if we see it go even higher to the $6 region, there'll be a lot of trades along the way there that will be catching. So look at this, from 2016, it rocketed from 3.5 to 4.4. Again, it happened in 2015. It went from 3.5 to 4.3, 4.4. And again, now we've got a really, really tight consolidation here. So you'll actually realize how small this range is when we look back historically. Really, really tight range here. And as some of you may know, the tighter the range, the bigger the breakout tends to be. So you can usually give the user as an indicator of how big the following move is going to be. If we've had a very long, very tight consolidation, you can expect a very sharp, very significant breakout. And just to give you a bit of a background, the reason for this is because a lot of people are going to be placing their stop losses above this region, and a lot of people will also be placing new orders above this region. So the further away we move, it's going to be a lot of people trapped on the wrong side of the market. They're going to start having to close their positions out and buy back. And similarly, anyone who's short is going to have their stop loss and will probably be getting stopped out, which is going to fuel the buying power. And that's going to push this market higher and higher until we probably kind of hit a peak and crash back down, because this market rallies very quickly, but it also crashes very quickly. So we're going to try and close out on one of these tops and hopefully make a few thousand from there. And I think if I go even further back, you'll notice some even bigger moves in this. Like, I mean, look at this. This was goes all the way from 3.5, if you look back at 2010, all the way from 3.5 up to 8.5 over the matter of just under a year. And you wouldn't do this in one trade. You trade in and out of this, but either way, there's going to be some huge moves in this period, and that's really what we're looking for here. And again, you've got the same thing in 2012. So these markets, very, very volatile, huge upside potential, and this is why I love to buy these. And we're seeing the same pattern in corn as we have in wheat. So very similar, very, very tight consolidation. Pretty much to all of 2017, we had this one big spike up, which made quite a lot of money at the time. We've got this breakout here. It's not quite uptrending enough for me to buy yet, but if I see it break out above this 4.4 region, I'm definitely going to be buying this, because I'm going to see if we can push up to this kind of 4.6, 4.85 region and try and catch some short-term or medium-term momentum on this way up before it crashes back down. And again, if I can zoom out a little bit, I'm sure we've got some pretty big spikes historically here. We've already got this one in May of 2017. And I think there's some pretty big ones similar to corn back in 2012, where it rallies all the way to kind of $7, $8, $9. So these are my markets to watch this week. The big one, of course, is going to be the dollar. seeing where this goes, because this sets the tone for the whole market a lot of the time. It's going to load again. So watch the dollar this week. I expect we maybe see a bit of a pullback consolidation, but we're going to pretty quickly see this kind of reverting back to a bearish trend. I think any correction here is going to be used as an opportunity for sellers to step back in and get a better price. So I'm still very bearish on the dollar, and I'll probably be bearish for at least the next kind of month or so, just using any kind of corrections to close out positions and sell into more breakouts. So let me know if you've got any questions, and thanks for watching.